Hi guys, I'm Caroline. I'm a sales rep here at Bucci Developments. I'm sitting here with two of our mortgage specialists, Navan and James, and we're just going to ask them a couple common questions that our customers ask us. So Navan, how is TD involved in the Bucci buying process?
So TD Bank's involved with Bucci from almost a decade, and we had a very important role in the process of purchasing because we ensure our clients are approved for the unit they're buying, and more importantly, securing a mortgage for the entire term of the construction, which can be from 24 to 36 months. Our approval letter is important because once we issue that, the second step, which is the bond, is dependent on our approval.
Okay. And James, what is a pre-approval and why do I need one if I'm buying a home?
Okay, so a pre-approval is, maybe a better word for it is an approval. It's where we take a look at your documents, we look at your income, we look at your credit, and we take all that along with your purchase agreement in front of an underwriter, and we get the bank to commit to approving you. In a 36-month process, it's a longer term, and there is a requirement that partway through, we do have to check on things and make sure credit is still good, income is still good. But once we've done that second check, everything holds through to the end. We're also, at the beginning of the process, making sure that we've done our appraisal on the property and that sort of thing, so you're protected against any changes in the marketplace, so that you know that when you commit to buying a place, we're also committing to make sure that we're going to stand behind you and fund your mortgage at the end of the day.
How does a 36-month approval process work?
So James answered more of that we initially do the approval and it's guaranteed for 36 months, but when there's 12 months that have surpassed, we reapprove you so the approval is guaranteed for the next 2 years. More important, the advantages of obtaining a 36-month approval are A, your interest rate is guaranteed. So in a rising interest rate environment, the last thing we want for our client is we give them a rate today and it's not valid when possession comes, and we don't want you to commit to a payment that's affordable and 3 years later you're like, this is not what I signed up for. So that's one of the most important advantages. Secondly, the value of your property that you sign at today with Bucci is also guaranteed 3 years down the road. Those are the two big advantages of obtaining a 36-month approval. Thirdly, if your financial situation changes in the next 3 years, the approval you got today is firm depending on all conditions were satisfied. We will still guarantee you that mortgage and we will not need to reapprove you as long as you go through the full 36-month approval process.
So why do rates appear to be so high?
So on a 36-month offering, the rates are quite a bit higher than if you were moving into a place in the next 2 or 3 months, that kind of a thing. The reason is the bank truly does guarantee those rates. TD is promising to give that rate to that customer if they want that rate. And there's a cost to that. They have to basically pay to hedge that rate. And so with that though, the other side of that is as a customer, you're not obligated to take that interest rate at the end of the day. It is a rate around which we can structure the approval, we can guarantee this, but as we get closer to possession, you're free to look at what rates are available and what's going on in the marketplace, and we can bring that rate down to match what's going on in the marketplace. So a lot of people set that up at the beginning, but the incidence of completing at that same 36-month rate is very, very small. So the likelihood is that we would be rebooking the rate into something better at the end of the day. If something happened and rates went up significantly and the rate we had promised was the best rate, you'd definitely hang on to that and keep that. But it's because the likelihood of you seeing that particular rate through the end isn't really great. The bank doesn't put extra cash resources into trying to bring that rate down up front. So it's, again, part of the process, and it becomes what we call the cap, the ceiling, or the worst case scenario. So you're approved off that basis with the hope that as we progress in time, we'll be able to rebook that into a more favorable interest rate that reflects the market rates at the time close to closing.
So at closing, it's likely that the interest rate will go down?
Likely,
Okay.
And if it doesn't, then the rate that you've got is a better rate than anything else available and you're happy to have it.
Okay.
So it's it's win-win. It's all for the client, for the customer. They have the choice at the end of the day.
So if TD appraised the building, can they guarantee the value of the home that it won't decrease upon closing?
That's correct, and like I mentioned before, that's one of the advantages of going through the TD Bank, because we've provided a blanket appraisal and we've completed your mortgage upon purchasing the unit. So with those sequence of events, at the 36-month stage, we don't go appraise the building and we don't verify the value. It is what it is when you've bought it. So that is a very important aspect of using TD Canada Trust for obtaining your mortgage approval.
And to add to that, it's not that TD is guaranteeing that you would be able to resell that home yourself at that exact price, but they're guaranteeing that your financing can be based off of that value that we've appraised. That's the guarantee.
Perfect. Okay, I think that's all the questions that we have for today.
Thanks, guys.
Thank you.
Thanks.